Welcome to Giving You More Than Numbers, CASS's business support podcast, your go-to resource for practical business advice and expert insights.
Welcome to Giving You More Than Numbers, CASS's business support podcast, the show where we break down business advice into practical, actionable steps just for you. Whether you're scaling up or just getting started, we're here to help you make smarter decisions. I'm Paul Barnes, and today we're diving into financial KPIs, that's key performance indicators, and how they can drive your business forwards. Joining us today is Paul McKay from Xero and Jacquie Hale from Vector Business Coaching, a client of ours. Welcome both, and let's get started. A little introduction, if you would, for each of you. So we'll start ladies first. So Jacquie, if you want to tell our viewers a little bit about you.
I'm Jacquie Hale. I run Vector Business Coaching. It's not my first business. The first 12 years in business was spent building a super successful TP hire business. So very different from what I do now. But I'm a business coach who's been there, done it and got the t-shirt, which is why I love working with business owners who also want to grow their business and manage to get themselves out of it, as I have done, and do what they want to do.
Fantastic. Thank you. And Paul?
Yes, my name is Paul McKay. I'm part of the Xero UK team. I typically look after accounting practices in the UK and help them digitise, and been working with Paul and the team at CASS for the last 5-6 years.
Yes. Fantastic. Brilliant. So, as we said at the start, today's all about key performance indicators and how they can help shape your business for growth. So, Jacquie, I think actually the first place to start is what KPIs, key performance indicators, would you expect your clients that are on their journey with you to focus on to target growth?
Well, the key things that you need to look at when you're targeting growth is that your revenue is going up and that your costs are not going up faster than your revenue. So that it sounds really obvious, but if more money's going out than it's coming in, you've got a big problem from the start. So when I start working with business owners, the first thing we do is look at their P&L, and most of them go, oh my gosh.
So by
where do I
P&L,
start?
profit and loss?
Your profit and loss page. And I do like working with Xero because it's lovely and clear on there, but you'd be amazed at how many business owners don't ever actually look at their profit and loss. So the first thing we do is have a look at what the revenue is that they've brought in over the last 12 months. We might even look at the exec summary and see how many invoices they've used and what their average order value is. And those are really good starting place when you start deciding about growth, because you need to see whether you've got revenue that needs to go up, or actually you've got great revenue, but you're spending it all. And then you have to obviously look at the costs and compare those to see where you can make savings.
Yeah, I think sort of clients that we've typically sort of onboarded and come on the journey with us are either in that realm of it's a spreadsheet and the accounting software is not there, or they literally run their business off their bank account and their bank account says, I have got £10,000 in it. Fantastic. But actually, what have we committed to in that £10,000? Is that something that you see, Paul, with or feedback from other accountants that you support around what typically their clients are after?
Yeah, I mean, it's always interesting. I deal with a lot of accountants where some firms do it in-house, and some firms really actively encourage their clients to engage with Xero, and it's those that really engage with Xero where we see the most success. And it's great because the first screen you're actually presented within Xero is just a snapshot of your business, and if you can just get your client to look at that gives them exactly what you guys have just been talking about. So just a snapshot of their bank account, how much money they owe, how much money they're owed, and also just key metrics of where all their money's going in the business. So if they can just see a snapshot, it really gets them more interested in the finances in their business.
Yeah.
So yeah, we see it day to day.
No, fabulous. And I think in terms of those KPIs, we've touched on actually my profit and loss, but sometimes it can go a little bit deeper than a profit and loss. And our experience is, yes, if we're making money, my bottom line, which I think is the phrase that we're all interested in, will say a number, but sometimes that doesn't then counter or reflect what's in the bank. So sometimes I think there's an element of, well, looking at where else have I spent my money? So is it on capital equipment, so motor vehicles, computer equipment, all of those things. So how do you measure with your clients beyond the P&L? So I think where we're trying to go is actually what other KPIs, what other metrics should we be asking our business owners, our clients to look at beyond that magic bottom line number?
If you want the absolute truth from a business coaching sort of aspect, is I get the customers, first of all, to not focus on that.
Yeah.
I get them to focus it back on themselves, because let's be honest, we all went into business to make money.
Yeah.
We're not here just to fill our day. So the first thing I always start with my customers is we plan out what they want from life, what they want from their business. And it's really important. And you've probably heard of Mike Michalowicz, who's written the book Profit First, and using the Profit First model, I would say to them, so what profit do you want this year? What money do you want your business to give to you? And the problem with the traditional way and with businesses not like yours, accountants who are, let's say, a little bit old school, is they hand over the accounts well after like history, what's been going on. The beauty of businesses like yours, where you're actually monitoring, on a monthly or even more frequent basis, what's going on in their P&L and what's going on in their business numbers, is they've got a much, much quicker handle on seeing alerts and alarms and when things aren't going the way they want. Yeah. So we start with, what profit do you want? And that's a really key focus, because then they know what they're striving for. But that's a big number probably. Yeah. So then they have to break it down. Well, okay, so if that's the profit I want, what's the costs I've got to also pay for? Yeah. And what's the cost of sale? Which, again, a lot of your listeners might be like, well, I don't know what my cost of sale is. But that you can all find in the accounting software, can't you? And that's something you can help the guys with to work out, well, what is it costing for me to deliver my product or my service? And I'm sure Xero's got a whole section on that, hasn't it?
There is. On the dashboard, again, there's an account watch list. So if you are wanting to keep an eye on particular areas where you're spending the most money, then that's a good area to look.
Yeah.
And I think connected to that accounts watch list is that ability to go, well, actually, if that's my end number and I know that my cost of sale is X percentage or X value, what you're then able to do is start to use Xero to put in high level initially budgets that you can then start to report against. So whilst we're talking about KPIs and key performance indicators, all of those fancy terms, sometimes it's a simple, I want to turn over this much per month. Here's what I think my costs are. Here's what my overhead costs are. So my accountancy fees, my bank charges, those things that sometimes you forget when you're in business that we've all got to pay for. And actually that will return our net profit before tax. And then actually one of the great reports to use is a budget variance report. So alongside how many invoices have been issued and what's my average invoice value, sometimes it's that, where are we? And some months you're going to be really strong and be ahead of budget, but you then may, especially if you're a seasonal business, you may actually see some dips. But the way that we've tended to work with clients just around budgeting and using that as a core indicator is we actually customize and build out that report to go, here's my budget per month. I'm replacing budgets with actuals. But ultimately, what's my annual budget and how far overall short am I to help drive? Have I got to go and sell more in the remaining 3 months to meet my budgeted target, which is ultimately going to give me that big number of net profit that as a business owner we all want? That's
right. And actually, once you know what that revenue target is every month and you know the cost. So if you know you've got, on a very simple term, you've got to get £5,000 in. Let's say if you're a small business, you're on your own, I need to get £5,000 in because I've got £1,000 of overheads and it's going to cost me £2,000 to deliver my service, and that'll leave me with my £2,000. So all those kind of numbers, people know those in their head, but they don't know where they fit in on the spreadsheet. They don't know where they fit in on the accounting software. So getting things into very simple terms is what I try and do with clients first, by looking at that P&L, looking at that exec summary. And then you can suddenly think, well, actually, I need £6,000. So how many customers more do I need to get that? So we try and then bring it together, and what the business owners actually need to focus on then is let you worry about doing the maths bit.
Yeah.
But once we've pulled the facts from the maths, we say, okay, so I need 40 customers every month or 50 customers every month. And then it's the business owner's job to work out how much they've got to spend to acquire those customers.
Yeah.
So all these are interrelated, but for business owners that don't like numbers, actually to concentrate on how many customers I need is a much easier thing to focus on, because they can do that.
Yeah.
And they know if they know where their customer's hanging out, or they know where their customer, whether it's through networking, they meet them, or they've got an online service or whatever it is, they can concentrate on making sure they convert the customers. And then that will, as you said, drop down to the bottom line.
Yeah, absolutely. I think actually then, so we've kind of got that, we know we need to measure and we need to really try and get a handle on what we do. And we appreciate that not everybody is numbers focused. So yes, number of clients, that tangible, breaking it down into smaller, less daunting targets. Actually, I need to sell 10 customers. I need to onboard one new client to help me afford, is a lot more achievable. But how then can we really harness the power of accounting software? Because we're putting all of this data in with all of our sales invoices and all of our bills. How can we, and I'm probably going to point this at you first, Paul, how can we then start to shape and benefit the business owner with the tools that Xero has built in before we talk about additional tools that we can use?
Sure. I want to, I suppose I want to focus a little bit on a particular thing we have in Xero called analytics. Now, analytics is something we released a couple of years ago, and it's a free tool. Initially, it's just based on 30 days, but there's the option to go up to 90 days from a cash flow perspective.
Yeah.
But there's a business snapshot facility in it, which is a simple one-page summary of your business as of right now. And the beauty of it that I love about this business snapshot is next to every figure, whether it's a percentage or a ratio or a debtor days and anything like that, there's always a little question mark or a little eye next to it, which breaks it down into simple English for non-accounting people.
Yeah.
And whenever I see a small business read that, they go, that's what it means.
Yeah.
So we're really trying to break that barrier down of communication, of saying actually accounts and the numbers of your business, it's understandable and you can look at it and you can understand it. So we're really focusing on that at the moment.
Well, I think Xero have just actually done a little bit of a tagline rebrand, haven't they? So they've gone from being beautiful business to...
Well, we've got a couple supercharging your business.
Supercharging the business, absolutely. And I think actually from that analytics page, I think what I like is, and we've definitely got clients in this sphere, numbers on a page mean nothing to them. But when you suddenly start to see graphs on that business snapshot of how are we tracking this year against the same period last year, that gives clients a big reassurance of, oh, I'm doing better than last year. Not just in turnover, but in my costs. My costs are controlled.
Yeah.
And the thing that I absolutely love about that analytics is the fact that you can see, without trying to scan a profit and loss report, the biggest areas in your business where you are spending money.
Yes.
And that ability then to click through on that £20,000 in marketing, let's say, I can click through and actually see every single transaction and every single bill that we've paid or processed. And it then becomes quite tangible, because I think sometimes you go, I'll commit to that and I'll commit to that.
That's a really, really relevant point there, because we all know that you should be spending on marketing. Let's be truthful. There's a lot of people wear the badge of pride. I don't spend anything on marketing, but they tend to be businesses that haven't got a rhythmic acquisition of customers. Yeah. So if you're going to be spending on marketing, you do need absolutely to be tracking the results of that. And you can find, if you use what you just said by going through your marketing line and seeing all those grouping them into, well, I spent that to get this type of service sold, because most businesses have more than one service or more than one product. I worked recently with, I've been working recently with a fantastic website design and graphic design company. And it wasn't until they really started, because they're creatives, and a lot of creatives, they go, I don't like numbers, but we really drilled into the numbers, and they were on Xero too. And we pulled things out. And what they also did is in the turnover, in the revenue, they started organizing their invoices by their products. So they had one for hosting, they had one for websites, they had one for graphic design. And suddenly they realized when we analyzed what they'd spent on marketing, what they'd spent on production, but most importantly, what they spent on time, they suddenly realized they got two very profitable areas and one that was actually losing money. And if they'd just bulked it all together, they'd have got a cost for sale over everything of, I don't know, 68% or whatever it was. But in truth, they hadn't, because their graphics, because of the cost of the print and all that, which they hadn't bulked together with that, their profit margin was tiny. And they realised, and they would never have done that by just reading a report from an accountant and going, oh yeah, okay, sign it off. That just isn't the right way to run a business in the 2020s.
So Jackie, I get the breaking down that profit and loss to be a little bit more granular. So a snapshot businesses can see income and expenditure by, let's call it type of sale and type of cost. But something that Xero offers that I think is really beneficial, certainly for those growing businesses that have got different sectors or different income streams, is to use Xero's own tracking. So it takes the standard category codes, but when a business owner raises an invoice or processes a bill or a receipt or a bank transaction, they are able to categorize it into one of these tracking categories that allow them then to shrink their profit and loss to only view that one tracking category, which that example you said where graphic design was not worth them doing because they were losing or not making a lot of money, that's really then powerfully shown and can be dealt with quickly before they are so heavily entrenched.
Well, exactly.
And the losses run away with them.
Yeah, you're absolutely right. But not only does it allow them to act swiftly, it also means that they can make decisions about pricing based on reasoning, not a finger in the air or what shall I charge. They can actually say, well, this is what I need to charge to make this a profitable part of my business, or actually, do I want to offer this part of my business? So I think asking your business questions, which we should all be doing all the time, actually the answers are nearly always in the numbers.
Absolutely. And Paul, is there anything else that I've missed from a Xero analysis perspective that actually our viewers and listeners would benefit from exploring with their accountant?
The other thing that's coming to mind really is things like Xero project. So, tracking categories are great for a business got different areas of the business they want to track and monitor and review. But in terms of what projects does is allows the consultants, service-based businesses to actually create jobs within Xero and track the profitability of individual jobs.
I guess that's great where it's running over a couple of months or even in some cases a couple of years where to run a P&L suddenly becomes quite awkward.
Exactly. But this is another great tool that we like using, time, expenses, things like that.
Thanks for listening to Giving You More Than Numbers. Subscribe for more business insights from Team CASS.